If you're any other crypto exchange other than Coinbase, you are in for big trouble in 2023. The SEC has just laid down the hammer on what it believes is unlawful conduct and usage of securities as well as custodial accounts. This is obviously coming after a number of high-profile crypto broker bankruptcies, which has unfortunately pulled investor assets into the Chapter 11 filings. Meaning, if you owned crypto on those brokerages that went bankrupt, you lost all your money that you had on those brokers. The SEC is now taking action against solving that exact problem. And this is going to hurt some crypto exchanges more than others, and in my opinion, also strengthen investor confidence in crypto for the long term. Because like I've said countless times, crypto is not a store of value, it's a way of performing financial transactions separate from a centralized entity. That is what causes the volatility in the price action, and regulation is what's going to truly drive more investment in this space from institutional players and retail investors. And that is exactly what we're starting to see the US government take action on. And those actions are exactly what I want to summarize in this video. But as usual, guys, before we get into it, make sure to drop me a thumbs up and hit the subscribe button if you haven't already. So to start things off, as you can see, cryptocurrency market caps have come down significantly since their peak in 2021. This has led so much trading revenue to get evaporated from brokers, leading to many companies having to default on their debts. Brokers like FTX, BlockFi, and Voyager were the ones that ended up getting the short end of the stick after people realized there were offshore brokers that had very minimal regulation, very minimal transparency about what they did, and which allowed them to perform extremely illegal practices with staking and moving customer funds into their own hands. And this has been a big reason why I've been so optimistic about Coinbase's position throughout this entire situation. I've said this countless times, but this is the only publicly traded US listed crypto broker in the entire world, even if it is not the highest trading volume one. Coinbase's position within the US financial system allows them to be at the forefront of regulation, adoption, and custodial investor confidence. And at the end of the day, that's what's going to drive overall crypto investments, allowing Coinbase to generate significant amount of shareholder value. And what we've seen just happen with the SEC is a clear validation of that fact. The SEC has just settled $30 million with a crypto exchange by the name of Kraken because apparently they're using staking operations that are not only mismarketed but also potentially sold as securities within the US. As a matter of fact, Kraken earned around $150 million in annual revenue from staking from customer assets worth around $2.5 billion. And this was all done under this umbrella where Kraken was marketing a variable interest rate on their stakes offered to their customers. And in some cases, if you actually read the terms and conditions of Kraken's agreement, Kraken could actually completely stop paying you interest on your stake tokens under certain conditions. And no, unlike what many crypto bears are saying, the SEC is not going against staking. They're going against illegal marketing of what staking actually is. You see, Kraken was marketing a consistent 20% yield to attract customers onto their platform and marketed their staking utility as an investment opportunity. Any investment sold within the US has to agree with the SEC's rules, particularly if it's a publicly traded commodity. And in this case, this would technically qualify as a security under the SEC's own regulations, and unless these securities are registered with them, it would be considered an illegal practice. And just 2 days after the report, we learned that Paxos, the partner company of Binance for their Binance USD token was just ordered by the New York Department of Finance to stop issuing their dollar-based token. As a matter of fact, the SEC is planning to sue Paxos for potentially violating investor protection laws, alleging that BUSD is an unregistered security, according to the Wall Street Journal. And the real problem arises from the fact that the New York Department of Financial Services was actually one of the regulatory approval bodies in 2019 that approved Binance's USD token onto the market. This was a partnership between Binance and their blockchain company Paxos Trust. And now here in 2023, that same company from New York is going against what Paxos is doing because they realize the investor risks associated with the token for an unregistered security. And as for why this situation is only surfacing today, 2 years after the stablecoin was issued, well, because the US Department of Treasury just a few months ago said that they expect stablecoins to resemble money market mutual funds and bank deposits, meaning these should technically only be issued by registered banks onshore. And Binance is not registered in the US, and neither is it a bank. And the entire reason why it's important to register with the SEC is because the SEC forces you to disclose significant risks with the financial investments associated with something like a stablecoin. And this neatly brings me on to the role that Coinbase is playing throughout this entire picture. As you can see, Coinbase does also offer its own staking program, but unlike Kraken, it does not market over 20% interest rates, and neither does it withhold your staking interest. This company is registered with the SEC on the NASDAQ. They have to disclose every single asset that they hold, whether that be customer assets or personal business finances. That is clearly outlined on their balance sheet and income statement for the fiscal year 2022, which is allowing this company to really diverge from a lot of the headwinds this entire industry is facing from the SEC. And why do I think that is the case? Well, first of all, Coinbase does not run its own stablecoin, whether that be backed by an onshore firm or not. They realize stablecoins are riskier assets and they don't need to offer all these extreme services to gain revenue. Coinbase already earns around 8% of their revenue from staking, around 12% of their revenue from institutional trading services, and obviously north of 50% of their revenue from trading. Right now, their subscription and services revenue is growing faster than trading revenues, and they've just cut costs by over 25% in their most recent quarter. Valuations for cryptos are down at all-time lows, and as I showed you in my last crypto video, the bear market cycle is coming to an end sooner rather than later. Whether you believe in the long-term value of crypto or not, price action does not lie. We've seen north of a 75% decline since the peak in Bitcoin prices, and we have seen this happen over 5 times over the past decade. And every single time we see crypto prices go sideways, accumulate for a couple of years, and then recover, typically going into the halving year. The halving years have always occurred at a period of 4 years, starting in 2012, meaning 2016 and 2020 were both halving years, and that's exactly why they saw outsized returns in crypto market capitalization. And now the upcoming year is 2024, with right now 2023 being that accumulation year with mostly sideways action. History is not going to repeat itself, but history does tend to rhyme pretty well. And that is exactly what I'm betting on as an investor in the crypto space and an owner of Coinbase stock. I have strong reasons to believe that Coinbase is going to make it out of this bear market stronger than they made it in. Most of the competition's been wiped out, and now they're at the forefront of the regulatory push from the SEC, with them being relatively safe under this new SEC custody proposal, at least for now. Bitcoin, Ledger, and stablecoins provide a real value technology to the financial system. And Coinbase is one of the companies that's been in this space for the longest amount of time. And even if we've seen a significant destruction in value over the past year driven by interest rates and the bear market, as we all know, such markets don't last forever. There is always going to be a light at the end of the tunnel, and it's going to be for the investors that make it through all the pain and stick to their conviction. This is something that just isn't applied to crypto. It can be applied to any form of investment thesis. Right now, the news that I'm seeing in the market is validating my thesis around Coinbase as a company. And although I can obviously always be wrong and things can obviously always change against me, I'm just going to go based off the data I am seeing today to make decisions about the future. As usual, guys, let me know your thoughts down in the comment section below, and I'll catch you guys in the next one. Take care.